Hello, good day once again. This is Specky FX. Welcome back to my YouTube channel. It's been a while I posted a video. So right now I'm going to be doing a weekly review. So make sure you click on the subscribe button, like this video, and also share so you can be updated whenever I drop a video. All right. So today I am going to show you something very interesting in the market, and I'm sure you're going to benefit from it. All right. So my trading style has always been smart money. I am going to unveil my trading style on how I pick my entries and how I mark my points of interest. Okay. Okay. There's something about the smart money trading concepts. You don't have to trade everything you see in the market because you only get yourself confused. The market takes time to build, gives you, data. So you can't just be jumping in at every point you see a trade opportunity. You have to allow the market give you what you want before you jump in. So I am going to show you a basic skill or a basic technique that will help you, advance in your trading. All right. So today I am going to do a top-down analysis, a weekly review on EURUSD and gold, if time permits. Okay. So first of all, I'm going to start with EURUSD. I'm going to use a line chart to explain something. It's a concept that happens in the market, but you fail, or many traders fail to recognize this concept because sometimes, smart money creates some virtual levels just for you to forget those key points. Okay, so now I'm going to head to EURUSD. First and foremost, I'm going to use this path, have something like this. I always do this each time I start my video. We all see that it might not be equal, but let's just see how it goes. Then we have a crash like this. Okay, so sometimes the market might just come here and start creating levels like this, probably something like this, giving you a virtual resistance. Then boom, comes back here and the selling continues. Okay, so if you watch my previous videos, you always see this illustration. It happens all the time. So take note of this. You have to be aware. This is what happens. The algorithm is designed to do things like this. It creates liquidity just so you forget the main structure in the market. First of all, I'm going to be using the daily time frame, all right, to show you how the market builds liquidity and where you should place your point of interest. You can't just be marking out support and resistance on 1 hour time frame. No, you start from the weekly, go down to your daily, then start looking for entries on your H4. Then for precise entries, you can either toggle between 1 hour and 5 minutes. Okay, but not for beginners anyway. Okay, so this is an illustration where you have your support right here. The support area. So we have our support. Then we have a BOS and a break of structure to the downside. Then the market started creating lower lows and just like that, lower highs. And from there, we started seeing some, new resistance being formed in the middle of nowhere. That's where you're going to ask yourself, is the market forming a virtual resistance where you don't even know why it's giving you resistance there? There must be a previous data as to why the market is stalling somewhere. So what the market basically does is it creates a virtual level so that they can have, liquidity being set up. Community of traders are looking for a sell from that point because it's having multiple touch, resistance. And what are you going to do at that point? You are placing your sell, placing your sell. And for those that are, waiting for the market to break above a certain point, they're waiting for the market to break above, then they start buying. So they create these virtual levels just to trap you. But first of all, you have to look at the higher time frame. Now, looking at the higher time frame gives you the direction where the market is going to. Now, looking at Euro USD for quite some time now, you can see that we have been on a bearish trend. So trying to catch some buy is actually dangerous, but you can still counter trend. If you're an experienced trader, you can. But the easiest way for you to catch, moves like this is waiting for the continuation. The trend is always different. Always don't forget that. Okay. So now, if the trend wants to continue, everybody knows it's a downtrend. Definitely. So many people know that this is a downtrend, but where are you going to enter off? You're just going to wait. Sometimes you get stopped out and the market still goes in your direction. So, but you have to wait, mark out your points. First of all, mark out your strategic points, your points of interest. So I'm going to show you how I mark up my points. I'm going to look for where the market must have, accumulated for a period of time. Like this 1, 2, 3, 4, we have supports here. Finally, the market broke through it and failed to do retests. And what happened? We had liquidity, the highs and lows. Markets created virtual levels, resistance, started selling. Then the next thing, you had a pump to the top side, actually filling up this, retesting this particular support that was broken, and it became a resistance. Then it started selling. Okay, so this is basically what I am going to show you. I'm not going to go into this. You can refer back to my previous videos. I explained much of this. So I'm going to show you how this played out on Euro USD, and I'm going to drop that point that you have been missing in your trading. So make sure you continue watching this video. I'm going to show you that stuff. It has to do with session timing. It's a very, very powerful tool that you wouldn't want to miss. So keep watching and you would get that info shortly. Okay, so first and foremost, I think I would have to do the markings of normal support, resistance, support. Okay, support, this support right here. This is another support right here. I think this is it. Okay. Then we have series of supports, multiple times support. Okay, so just mark out your support and resistance on the daily time frame, okay, where you have double bottoms, double tops. So mark out those areas as your point of interest. So points of interest. So this is just basically what the market impulsive move to the downside. We had a lower low, then we're expecting a retest back to this point, then market continues going down. Okay, so this is just the normal basic break and retest. But what happened before this? Okay, this is what I want to show you. Okay, so we can see the levels being marked out, and this is my first point, second point. Then we have a little imbalance right here. Okay, so I always combine my retest points with an imbalance. I want to see if there was an imbalance when the market broke below the structure. That gives me a more precise, perspective of where the market wants to go to. Okay, so I will just mark out my imbalance right here. Okay, so this is my imbalance. Please don't forget the whole number theory. I always use that. I don't miss that. The whole number theory 50. Okay. All right. So this is my daily IPA. I will just have to give it my daily IPA. Daily imbalance. Then the next thing I have to do is, okay, I'll mark out my lows. This is my low. Sorry. This is my low, okay. I'm sure most of you understand the concept of marking out your highs. These are possible targets where the market will run and take out liquidity, okay. Okay, right now I've marked out my daily. This is just what I want to show you for today. I'm not going to go deep into how the market moves and all that. I'm just going to show you how these entries are formed and how you can apply everything together to make money. Okay, because the essence of this is just for you to make money out of trading. Okay, now we've marked out our daily IPA. Where is my daily IPA? Just right before the market broke down to the downside. Okay, so one of the points, I'm at the downside of the trade. and the market created an IPA. I've marked this out, and let's go to the 4 hours time frame. Okay, so this is my zone now. Let's go to the 4 hours time frame. This is my point of interest. Now on the 4 hours time frame, what did the market do? What did it do? It started creating virtual levels. You see how the market was choppy all this while. You at some point you get confused, like what's happening here? Market just going up, going down. It should come and retest this point. It should come and retest this point. What is it actually doing? What is it actually doing? Then finally it broke above and boom, retested that structure. Then the sell started. Okay, so this is what happens most of the times. It happens most of the times when the market breaks structure. So you can do your research and always check for the market manipulation. Whenever the market starts giving you some form of resistance where it's not even supposed to, then believe me, it's setting up a trap. And most times too, some people will see a BOS and they'll start trading off these points as a BOS. And I know how smart money traders, most of smart money traders, they want to take this and, oh, this was the candle that took our liquidity, and boom, then the next candle starts selling. But I'm going to show you something that's going to save you from all this mess. Okay, all right. So next, like I said, you can see how the market created these virtual levels right here. This circle. See how the market created resistance, 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 leaving this liquidity point right here. You can see how created buy side liquidity and sell side liquidity, up, down. Okay. But remember, the structure that got broken was what? Was on the daily time frame. So this is where I want the market to come and retest, not all these points. That's because I don't have any data before this. I don't have any data here. There's no structure here. This place, there's no structure here. So this is where we have the last point of support before the market broke through it. So this is my point of interest. So in line with this, my daily IPA was also in line with my 4 hours IPA. So I think it's in line. Then the next thing was to point out what session. Let's go to the 1 hour time frame. Okay, so 1 hour time frame also, it's in line with 1 hour time frame is in line with 4 hours IPA. It's also in line with 1 hour IPA. Everything aligns like this. Believe me, the chances are high that it's going to go in your direction, in line with our daily zone. Okay, remember our daily zone is right here. Now, let me point this out to you about the session time numbers. I've mentioned it on my previous video. If you watched my previous video, talking about session time, it's a very, very powerful tool I use in confirming my trades, and it saves me a lot of, my SL being hit, because yes, most times I always like to stick to my trading time. I don't know when you trade. I prefer trading during the New York overlap session. That's when I find my entries. And that's when I enter off, and within minutes, I'm in profits. Okay, so now let me put on my session time. If you don't know how to do this, you go to your search and look for sessions. You add it as an indicator. It's going to show you the times, the New York session, the London session, and the Asian session. So right here, the white area, it's my Asian session, the yellow Asian session. Then see this green point here. This is London session. Then this one here, it's your New York session. So this point here, it's your New York session and overlap. So this is when I like trading. I want to look for the highs. I'm going to explain how these highs and how these lows are created during those sessions. Okay, in the next video. So right now, I just want to look for the low. Now, this is the lowest point the New York session created. Now, take note. This is the lowest point New York session created before we had this BOS. You can see we are making reference to our daily zone, our daily IPA, also 4 hours IPA, and it's also in line with my 1 hour IPA. Okay, so everything is in line. Then I'm going to look for the lowest point on either the highs of the overlap or the lows of the overlap. So this is my overlap low. This is the point. All right. So I want this market to come back during this time. That is when I'm sure that this trade is not going to hit my stop loss most of the times, at least 95% of the times. If all these things are being checked, I mean, trend, a retest, IPA being filled. Some people call it fair value gap. I use IPA, inefficiency in price action, and all these things. And liquidity has been set already. So there's every chance that 95% this trade is going to go in your direction. So if you wait for all these confirmations, believe me, out of 10 trades, you have to win like 8. There are losses that would come, definitely. But once you stick to the rule, you are not changing strategy every day. Today you're trading this concept, tomorrow you're trading this concept. Definitely you cannot be profitable. The only way to stay in the game is maintaining those rules and making those rules simple. And these rules are what I'm going to show you. It's very simple. Your normal break and retest rules, but you have to think like, what are the possibilities that this market wants to manipulate, these points. So I've mentioned this point 03650. Okay, so now before then, when this thing was piling up, I was like, wow, this is a very high probability trade that is about being formed, because I can see how this market is just in the middle of nowhere. This is where I want the retest to happen, and the market was just going up, down, up, down, up, down, moving sideways, moving sideways, moving sideways, moving sideways, gradually piling up orders here, piling up, liquidity right here. See, piling up liquidity, piling up liquidity. Then what happened? We had the run to the top side. Now, watch out how the session time aligns. When did price come back to this point? The same time, the same time, overlap. When did this break occur? This break occurred during that same time. That same time, overlap session. It's not a coincidence. I didn't form this. This is how the algorithm is designed. So that's why it's so accurate. So if you get these points of interest, there's every possibility that you are going to hit profits within a short time. Okay, so this saves me a lot. I'm going to show you how it has saved me from some unnecessary losses. Okay. Okay, so we can see how the market trapped, traders that had their buy stops orders just above here. And for those that were early sellers, they got knocked out. Okay, and we had this run up here, right? You can see how this point IPA was filled, the daily structure was retested, and what happened around that zone? We had a double top. Okay, so this is where your pattern plays out. Your double top around the point of interest, and boom, you're in profits. So if you're not missing, if you're not faking your first entry, which is around the first what's it call it, the first POI, which is the daily IPA, which was in line with the H4 IPA and also the H1 IPA, then you can take the second entry during that overlap. That is when I love taking the trades. Okay, I love taking trades when those moves happen during overlap. Okay, this is the same overlap session. That's my best time for trading. Okay, the overlap session also, the same thing happened down, and boom, the market starts going down. All right, so that is, I'm going to show you other examples too that would make this explanation more clearer. All right. So like I was saying, while this point was invalid, okay, whatever you might say, I would say this session didn't align. Okay. So when I see highs being created by Asian session, I avoid trading. It might work out for you, but that is not my trading style. I'm telling you what works for me all the time. This high was created by Asian markets. This imbalance was here, and this high market is coming back during what time? New York session. What happens? Look at, when is it coming back? New York session. Blast. So if you had an order here, by just using session time, this didn't align. When did this market come back to this particular zone? It was during the London session. And I'm not a fan of trading an Asian order block during London time. Hope you're getting that. All right, so I am going to show you more examples. Okay, so the next entry was right here when the market closed below this particular structure here, a BOS to the downside. Then we had another entry. I'm going to place my highs just above the open of the London of the overlap candle. All right, so continued. Then your first take profit, first structure here, this support area, then you can, keep partial, then ride the trade to wherever. Okay, so that's on Euro USD trade, the top-down analysis on how I caught this particular move to the downside. And I'm going to do a weekly review now on Euro USD. So I'm going to clear all these charts. Then we're going to see how and where the market is probably headed. Okay, so we have right here, we have, okay, clear the charts. Okay, so this is the weekly time frame. Looking from the weekly perspective, we have a PFU, we have IPFU. First and foremost, we have to check weekly open and close. Okay, so this was the candle that closed below this week. Then now this is the next one. This is the weekly open and close, this line here. So we are still bearish. Okay, we are still bearish. Now the market has left an imbalance. All right, the market has left an imbalance, so we might have a retracement back. So this is the first point where we're going to watch out for price action. The next point is right here. And the last point we have, it's right here. So this is where I want to watch out for possible bearish move to the downside, because on the weekly time frame, we can see how bearish this candle has closed below the weekly level. Okay, this has closed below this point, the open of the week and the close of the week and the open of a new week. So we can see this bearish candle closing below it. So we want to see for the retracement, then the continuation to the downside. Okay, so this week might just be continuous. We might have some bullish moves this week, but this is where I want to take the trades for a sell if I see a confirmation which satisfies or which meets my trading confirmations, where liquidity has to be created. Then I have to see possible patterns like this, taking out liquidity. Then I jump off, waiting for the market to create my entries during my trading time, which is overlap New York session. That's when I look for my entries. I don't look for entries any other time. Whatever the market wants to do, it can do during London session. I'm not interested. I just want to wait for overlap to give me those moves. Okay, so these are the areas where I have just marked out. These are the areas I'm waiting for this week. So let's see how this week is going to play out. And the next week, I'm going to do a review of how the week closed. So mark this point. This is the point where the market will probably react. This is on the weekly time frame. Go to my daily time frame. The daily time frame is right here. Okay, daily time frame is right here. So we can still see the market running down to take out this particular lows here, right here, but not just so immediately. Okay, so we can see the weekly as, you know, can still come back, retest this point a little bit, push up. Then if I start seeing any move, then this confirms my trading pattern. I can start trading off from this point. Okay, but for anything that happens above here, well, what next? We start waiting for the next data. If yes, there are two sides, or there are points where this market can go. There are two levels. It's either it's going to break this level, or it's going to, you know, continue selling from this level. All right. So, but once all my confirmations are met, I double top my session time. I'm looking for an IPA on the lower time frame and all that 4 hours time frame. Let's go to 4 hours time frame to see the 4 hour structure right here. I'm having an IPA, right? Okay, so this is where I want the correction to happen right here. So let me switch over to my session time and see these levels. Were they created by the New York session, or were they created by overlap? Were they created by Asian rather? So I'm going to mark out and on my session time, and boom, I am going to see, well, it doesn't really align with when I do trade, but I am still watching out for this point because it's also an important time where reactions might happen. So I have a New York purge here, right here. I have a New York purge, and it's also in line with, I think, the London Open, right? So around here. So I'm looking at this point as a trap, but also take note, it all depends on how the market reacts at this point and the candle patterns it forms around this point. I want to see a clear liquidity being created, then the market coming back to fill the imbalance, then any possible, you know, reversal candlestick pattern, then I hop in, I put my stop loss just right above and allow the trade to play out. Okay, so these are the points you have to watch out for this week. You have to watch out for this level, this week, the retest, then continuation to the downside to take out this liquidity right here, to take out these lows right here. Okay, so this is my projection on Euro USD. All right, so the next one, is gold. I think basically it did the same thing. If you go to the weekly time frame, if you go to the the daily time frame, you can see how I marked out these levels and how it's the same with what just happened on Euro USD. So you just have to take note of these zones on the higher time frame. Where did the market break without retesting? This is where we have a double bottom on the daily time frame. The market broke, give us a bullish pin bar, and finally went back down, creating an imbalance between these 2 points right here. You can see the market still came back on the daily time frame. You can see, though we had a little run inside, you can see how the imbalance, using imbalance, you can see imbalance, market still came, dropped down, but still continued up because it had not gotten to the point of interest where it should actually retest this structure. So you see, basically the same thing happened. The IPA, the daily structure, the support being broken, the market coming back, the market left in balance on the daily time frame. Checking on the 4 hours time frame, you can also look for the possible points where you can start entering the trade. But I did not enter off from this point. Of course, I did not enter because it wasn't in line with my session. Yes, although it played out, but being on the safe side, following my rules, I did not enter off here. So marking out these zones only gave me an idea of where the market might possibly react. Okay, so this was the first point, which was obvious enough. But on the weekly time frame, you can see this support right here, and this imbalance. You can see that was the day we had this full rejection to the downside, but that was not enough for me because I know gold will always try to run up above the previous impulsive drop before it starts making its move. All right, so this was just like, okay, for those that just want to catch fast moves, you can still apply the same session time, the lows of New York, and when it wants to create the high. Okay, so everything just has to align. Then you can just catch some quick pips there. Okay, so let's see how this actually played out. So remember, this is our point of interest here because this is the structure that was broken, and we need to get the proper retest. Okay, so this also fulfills the same pattern. Market took our liquidity, then started selling. Okay, so these are patterns that you would see, but now the entry is the issue because you don't know where to enter off. And I'm just going to use my session time to check out how and where I'm going to enter off a trade. Okay, so this is my gold analysis. This was the broken support. I will explain again for those that are just understanding the trading concept and those that are new in trading. Okay, so this is the broken support. This was the IPA, and okay, this was the broken support. This is the IP on the daily time frame. Okay, the market came here, came down, started selling. So let's go to the 4 hours time frame. Let's see how let's see the data we have around that marked out zone. Yes, we have right here. So like I was saying, we have another block on the 4 hours there, right in line with our daily structure. Okay, you can see that little IPA. You can see that little IPA right here. You can see the imbalance right here at 1807.32. Okay, so now let's put on the session time. All right, so this was actually okay, sorry. So this is just the support that was broken, candle close below it right here. So expected the retest to have come back. Boom, failed. All right, this is the next one. Support right here. Okay, have series broke below this point, right? This is the point it broke below. Then I am going to mark out that zone and wait for the market to come back and give me okay, so this is the zone. All right, now I'm looking for an entry, H1. H1 is going to tell me when the New York session opened and when it's definitely coming back. All right, so we have the lows of the New York session right here. This is the low point right here. So this is basically the low of this, the New York open. Okay, the low of the New York open was right here, right? 30. All right, so therefore I am looking for the entry around the same time. Okay. All right, so overlap, got my entries around here. I think on the 5 minutes or 50 minutes time frame, exactly 5 minutes time frame for refining, and just put the stop loss slightly above the candle that closed below that structure. Okay, so I think the 5 minutes was more of precision and in line with my sessions. Okay, so this was an overlap session right here. So this was in line. You see why you are marking, I'm marking out my zones on the higher time frame in confluence to, changing from the higher time frames to lower time frames. So I'm getting an idea of how the market reacts at that particular point and that zone. So the entries are not formed from the lower time frames. I mark out the zones on the higher time frames, which is just right here, the zone you see. Now, market broke below it. The replay function is not on. If not, I would have said, okay, now when the market closed, I've marked out the line at 1771.30, and this was my New York. Take note, this was my New York overlap block. All right, so I want to see how the block. Let's put it this extend to the right. Okay, so this is where I want to see the entries, just using that same thing, right? So you can see how the market also on the lower time frame takes out, creates liquidity on the lower time frame, and does this thing. Okay, so this was the entry. Yes, it was not an early entry, but I didn't miss, at least. Okay, so this was the entry right here, putting my stop loss slightly above my New York high. Okay, hope you understand. Hope you guys understand what I'm trying to say, because just if you don't understand, all you just have to do, go back, replay the video, and note down the points of what I'm trying to say, the high and the low of the New York session. That's where I'm going to put my stop loss. Okay, so this is the high of the New York open. This is where my stop loss is going to be. Just remember, this thing didn't happen the same day. It didn't happen the same day. It happened the next day, based off of the structure I've already marked out on the higher time frame, looking for an entry because the market has given me a BOS. Okay, so that is how you spot entries. Okay, so I think this basically explains how my session timing has helped me to, minimize losses, because I always want to wait for the market to give me a signal, and for the market to get to a particular point before I can start reacting. That being said, so the same thing, expecting gold to, okay, we have closed here, we have an IPA, so we're still looking for gold heading to the downside. Okay, heading to the downside. So looking for gold heading to the next structure on the daily we have here. It's this zone. Okay, so this is where I'm expecting gold to react, because why? We had support here, got broken, we tested resistance, went back, resistance, then broke through it. So expecting the next reaction on gold at this point. So this is just basically how I mark out my zones, wait for the market to give me, entries on the lower time frames. Before it gets to that my point of interest, the market must have built liquidity, created a virtual support and resistance, imbalance, break of structure. Then it can help me to understand where the market wants to go to. Okay, I want to just jump in, and it has to be in line with my sessions. So if it doesn't align with my session, I'm going to allow it until it comes down to whenever I want to take the trade. Okay, so that's the weekly bias on gold. On gold weekly, the weekly. So you can see the weekly right here. The weekly is also so bearish. So marking out this point right here, weekly time frame. So almost the same thing on EU, same thing on gold. So this is the point where, yeah, down, down, down. So expecting to run below this liquidity here, right here. So run below here. We've taken out this. Okay, so this is the next point. It's not just going to happen in 1 week. Okay, so this is where the liquidity down here is closer than the ones above here. Okay, so they are running for the liquidities below these points. Okay, so this is where we're expecting gold to head down to. First and foremost, the lows right here on the weekly. The next point, remember the open and close of the weekly time frame, which is around here. Okay, so just mark out your charts on the weekly time frame, daily time frame, and put your zones right there and see how the trading styles will change, because when it gets there, you'll definitely see the new pattern that will be developing at those areas. It can help you to catch some pretty good moves. Market starts, creating, smaller structures for the higher time frames. So this is where, these are the points where I'm expecting gold to get to. All right, so right here. So expect a small move, then we have a continuation to the downside down here. Okay, so watch out for these areas that has been marked out on gold, and next week we're going to do a review again on Euro USD and gold, and let's see how it plays out. Hope you enjoyed and hope you learned something from this video I just dropped. Next week I'm going to be going details into the session timing and how and where to take off your trades and how to spot high probability trades. So this is just an aspect of how I catch my trades. So I'm still going to really reveal more trading models to you. So just make sure you hit the like and the subscribe button, so whenever I drop a new content and a new video, you are going to get it. Okay, have a great trading week. See you next week. Bye.